All right, you guys, welcome to the Thursday night data dump. So Nvidia reported their earnings. Earnings were good, but their margins were a little lower than normal, which made Wall Street wonder if Nvidia will be able to maintain the profit rate that they've been carrying over the last 7 quarters. So you can see that after that news, the stock closed down 6.38% on the day. This last candle here is well off of the trend that it was trading at leading into the earnings. You can see that it's below its 50-day moving average and it's touching the 20-day moving average. And so why is the 20-day average below the 50-day average? A lot of that had to do with this carry trade here, where a lot of the stock was sold off. So now we're looking to see if this sell-off in Nvidia continues. Will it make it back down to this $95 trend line here? So you can see in the first half of the year, 95 worked as a level of resistance for Nvidia. It couldn't break out of that. Finally, it broke out after the last quarter. And since then, it's just kind of traded down. And so now with this sell-off, the question is, do we make it back down to this 95 mark? Or can we get Nvidia to break out over the 130 resistance line up here? So I'm going to be keeping my eye on that $95 mark on Nvidia for about the next 3 months or so until its next reporting period to see if we get back down there. Going over to the S&P 500 map really quick just to take a look at the charts. So we heard that we're getting the Fed rate cut in September. There's a lot of excitement about that. What does that mean for the markets? That means that there's going to be a lot more attention paid across the board. So with the Fed cutting rates, it'll be cheaper for companies to borrow money from banks. That means that they'll have more money, more capital to reinvest into their companies, and they'll be able to pay that back at lower interest rates, which means that more people are going to be more excited about investing into some of these smaller companies. So you can see the mega caps across the top here. The bigger the block, the larger the market cap. So you can kind of see the larger blocks: Amazon, Google, Apple, Microsoft, Nvidia. They're all starting to turn different shades of red. And that means that the stocks are selling off over the last recent month. And so people are pulling profits from the stocks that have grown the most in the last year to 2 years. So there was a short bear market in 2020 and late 2022. And so a lot of people invested into the companies that were selling off in 2022, the mega caps. Well, since then, these stocks have gone up tremendously. So if we change this over to a 1 year view, you can see just across the board, Nvidia up 141%, Broadcom 76.34%, Eli Lilly 70% nearly, Meta, Facebook 73% there. This is just in the last 12 months. So a lot of that is just profit. So now you're going to see Wall Street take all that profit. They're going to put it into some of the smaller companies. And so this chart is going to look a lot more green in the lower fields and a little less green across the large caps well into this cutting cycle. So probably this quarter for sure, and then the next quarter, depending on how deep the Fed chooses to cut rates, you may see this broaden out really wide. So you'll have a little bit more green across the screen and less green concentrated into just the mega cap names. So that's just a really quick Thursday video. Let me know what you guys think in the comments.